question that I'm getting most right now is what's the next play on the S&P? And if we think about what the S&P is, the XLK sector, the XLF sector, the XLV, and then diving a little bit deeper into that, Apple, Microsoft, Amazon, Google, Nvidia, Tesla. The question may not be what to do with the S&P, but rather what are the sectors that are primed within it to set up. Now, S&P at a stock level is Apple, right, which is still in the aftermath of the WWDC DC conversation. And, if we're going to talk about proxies for the S&P, Apple would have to be at the top of the list, as would XLK. So let's talk about some levels. I'm going to throw some levels in this and then talk about what that could mean to the S&P futures as a whole. But remember, if we're trading the futures, we are trading the pieces of it. And when they organize, the broader average moves higher or lower. So again, pieces like those stocks and sectors that I mentioned. Apple will turn into a buy in the daily price movement range zone. Each one of these zones is based on historical volatility going back 6 months specific to the day of the week. Apple on the 1 hour chart is oversold. It's sitting just above the 200 propulsion, which is the combination of the 8 fast EMA, the 200 slow EMA, and a cross. And when that cross interacts with price in a specific way, those dots turn on. What I want to do here is focus on a little bit of a pullback to support, get long Apple. Result, that's going to be a bullish factor for the S&P. All right, let's go into another symbol. And this is a lot of what we do in Charts and Coffee, where the viewers will give me a symbol, we break it down, and we think about the broader implications. I'm not as interested in NVIDIA. I know it's very exciting to talk about what's next for it, but think about what NVIDIA and the SMH could trigger in terms of strength, and where might we be seeing catch-up. The catch-up is happening at things like AMD. The catch-up could be happening in things like Cisco, Intel. Think about tech. It could be happening at layers like Micron. So I would say, or even just broadly the SMH, I would be a little bit less interested in NVIDIA and a little bit more interested in what are those stronger names in the SMH and how could they be moving higher. Let me show you what that would look like. Here's the SMH, and obviously here's that 100-point move in NVIDIA. But what about Taiwan Semi, ASML, Intel, AMD? When that number one weighted stock in the SMH takes off, the tide starts to rise. Micron would definitely be on my list of stocks to watch, right? So let's take a look at MU, not only on a 1 hour chart, but on the daily time frame, right? How would I look to play MU? In this case, it would not be the 1 hour chart that I'm interested in because the trend has gone red or down. However, the overall trend on the daily looks rather healthy. I would love to see the gap close from the 524 to 525 gap. That would be fantastic. I don't know that we see $66.50, but the closer we can get to that, the better, right? So we look at NVIDIA, we look at the SMH, we think about what would the implications be to the NASDAQ. That would be bullish, right? Because if the SMH is rallying, that means NVIDIA remains strong. NVIDIA is weighted in the NASDAQ. So you just see how this all sort of cascades. We can go index sector stock, which is what I teach, whether that be in the futures room or my Sector Secrets Mastery, but we can also go stock sector index. So as long as you're fluent either from the larger to the smaller index sector stock, or from the smaller to the larger stock index sector, stock sector index, you're always going to be in good shape understanding how one affects the next. Right? So this is, and if what's good for the NAS is pretty darn good for the S&P. So let's kind of tie this up. Everybody wants to know one really simple thing. Does the S&P take out 4,300 or not? Now, in this week in the markets, I do this newsletter every week, and we've been doing it now for, I think since April. We're doing it now for a couple of months. And we're now getting to a point where the list and the outlook are getting a little bit more longer term because we have a better view of the macro. All that gets discussed in the report, which by the way, you can check out at thisweekinthemarkets.com. All right. Now, S&P taking out 4,300 is not as easy as the XLK and the NASDAQ continuing to punch to higher highs. They've got us this far, right? They've got us this far, but it's not enough. If you're looking for that next leg, and possibly, let me get this typed in here. If you're looking for that next leg and possibly more opportunity to ride shotgun with this move through 4,300 on the S&P, it's going to have to be financials. It's going to have to be healthcare because tech has done its job, right? Tech has stood back and said, look, I've got you here. I need some help. And that's where higher highs in financials, higher highs in JP Morgan, Bank of America, higher highs. We need strength. You know, who's the problem here? We need strength at names like UNH. Where UNH goes, XLV goes. We need strength in names like Johnson & Johnson, right? And that's where XLV can then contribute. And that's where a sustained move through 4,300 is. And that's where the opportunity may be. So I'll be keeping an eye on the historical volatility of the daily price movement range. Probably on Friday, I'll probably do another recap video. But one of the things I want to tackle is a lot of folks ask me, all right, how do I know at some point, Rog, you know, you've told the story of 2008, how you rebuilt your portfolios and things like that. And what was it that you did? And a lot of you know I used the V-score, and that's the volume weighted average price standard deviation. Why did I do that? Because the only way to measure the big money flow, the big money interest, is volume and volatility. Price-based volume, think VWAPs, think V-score, think volume ledges, and value at risk, which is another way of looking at volatility, right? Because every single institution understands the statistic that's going to look at how much could the possibility of financial ruin for a portfolio for the firm. Check out Margin Call if you've never seen the movie. In fact, let me know in the comments if you've watched that movie. And if you have, you know the exact scene I'm talking about, where the fictional character within this fictional Lehman Brothers says, hey, we've blown up. We just don't know it yet, right? Because they went beyond their value at risk. And that volatility measurement is what they look at. So if we can do that in a different way, using VWAPs and volume-based ledges of price, and then also daily price movement ranges and things of that nature, we can decode what's going on. So we'll talk about that on Friday, but that's what we're doing right now. That's what you're going to see me do because we need to coattail that size. All right. All right. I know I ran through a lot here. If you have any questions, leave them below. Thanks as always for watching. I'll see you in Charts and Coffee in the morning, 9 a.m. Be good to each other, gang. Hey traders, Raghi from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.